For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Over the past several years, Nvidia and Palantir Technologies have both established themselves as two of the most widely followed and heavily invested technology companies in the entire stock market. Since the beginning of 2023, each company has witnessed a dramatic surge in its stock price, with both stocks appreciating by over 1,000% during that period. While Nvidia's rise has certainly been impressive, it is Palantir that has led the charge, with its share price climbing by more than 2,000%, making it one of the fastest growing technology stocks in recent history. However, one major factor that might have held Nvidia back from delivering even larger gains is its size. At the start of this period, Nvidia was already a very large company. As a result, even though its stock price has increased significantly, the impact on its overall market capitalization has been somewhat limited by comparison. Today, Nvidia has reached a staggering market capitalization of approximately $4.2 trillion. This puts it at the very top of the global market, making it the most valuable publicly traded company in the world. On the other hand, Palantir's market value currently sits at around $360 billion. While still large, Palantir is only a fraction of Nvidia's size, which gives it a lot more room for future growth if the right conditions align. Both of these companies remain highly attractive to retail investors, but now a new debate has started to emerge in the investment community. Investors are asking which is more likely to happen in the near future. Will Nvidia increase its market capitalization to $5 trillion first, or will Palantir grow enough to reach $1 trillion before Nvidia crosses that next threshold? To break this down, let us start by looking at what Nvidia needs to do in order to reach a $5 trillion valuation. From where it stands today, the company would need to see an additional increase of approximately 19% in its stock price. For a company in the technology sector that has already delivered such extraordinary returns over the past few years, a further increase of 19% does not seem far-fetched at all. In fact, given Nvidia's continued dominance in the artificial intelligence chip market and the strong ongoing demand for its products across multiple industries, reaching $5 trillion in market value is not only possible, it may be highly probable. The bigger question for many investors is not whether Nvidia will get there, but rather when it will. Even though Nvidia currently trades at a fairly high valuation, it does not appear to be excessive when considered alongside the company's performance and expected future growth. Analysts are projecting that Nvidia is trading at a forward price-to-earnings ratio of 38. While that is above the average for the broader market, it becomes much more reasonable when you factor in the company's extremely high profit margins, which are currently above 50%. With even more growth driven by artificial intelligence just around the corner, it is easy to understand why investors are optimistic about Nvidia's chances of hitting $5 trillion in the near future. If the overall stock market remains stable and the economy avoids any serious downturns, then it is not unrealistic to expect Nvidia to cross that $5 trillion milestone sometime before the end of next year. And if artificial intelligence adoption accelerates even faster than expected, Nvidia might even reach that milestone sooner than anyone currently predicts. Now let us turn our attention to Palantir. For Palantir to reach a market capitalization of $1 trillion, the company would need to roughly triple its current value. That is a much more ambitious target and would require sustained high growth rates and continued investor enthusiasm. However, Palantir has already proven that it can deliver extraordinary gains in a short amount of time. In the past year alone, Palantir's stock price has soared by around 430%. The company has been positioning itself as a critical player in the artificial intelligence space by offering sophisticated data platforms that help organizations analyze massive amounts of information and make more informed decisions. One of the unique strategies Palantir uses to grow its business is what the company calls its boot camps. In these sessions, Palantir invites potential customers to explore real-world applications of its software and experience firsthand how the technology can solve their most pressing operational challenges. This hands-on demonstration approach has allowed the company to attract new clients and expand existing relationships, which has contributed to its recent surge in revenue and share price. Palantir expects to generate revenue of approximately $3.9 billion this year, which would represent a 36% increase compared to 2024. While this level of growth is certainly impressive, the company's valuation metrics continue to raise eyebrows. Palantir is currently trading at a forward price-to-earnings ratio of around 260, which is extremely high by any standard. However, many investors are looking beyond traditional valuation models and instead are focused on the potential for long-term growth in artificial intelligence and and data analytics. This future-focused perspective has helped to support Palantir's share price even in the face of valuation concerns. Another factor working in Palantir's favor is its strong reputation among government clients worldwide. The company has a long-standing track record of working with defense and intelligence agencies, and this has positioned it well to benefit from any increase in global defense spending. That being said, there are still some risks to consider. While Palantir has delivered outstanding returns in recent months, its valuation appears to be heavily influenced by speculative interest from retail investors. This means the stock may be more vulnerable to sudden pullbacks, especially if broader economic conditions begin to deteriorate. When the economy looks strong and investor sentiment is optimistic, Palantir tends to perform very well. However, if conditions worsen or public excitement fades, the stock could experience sharp declines. In fact, back in April of this year, after President Trump introduced reciprocal tariffs targeting almost all United States trading partners, Palantir's share price dropped to below $80. That decline pushed its market capitalization back down to around $180 billion. Comparing the two companies side by side, Nvidia appears to be the more stable and better positioned investment option. It has a robust financial foundation, controls a leading share of the artificial intelligence chip market, and while its valuation is also elevated, it is still much easier to justify based on current and future earnings. Palantir, on the other hand, offers high growth potential, but comes with more uncertainty and greater exposure to volatility. In conclusion, Nvidia and Palantir Technologies have both seen explosive growth since the start of 2023, with Nvidia rising over 1,000% and Palantir soaring by more than 2,000%. Nvidia currently holds a market capitalization of around $4.2 trillion, while Palantir sits at approximately $360 billion. For Nvidia to reach $5 trillion, it only needs to climb another 19%, which seems realistic given its dominance in the artificial intelligence chip market and strong financial performance. Palantir, on the other hand, would need to nearly triple in value to reach $1 trillion, which is a much tougher goal, especially considering its extremely high price-to-earnings ratio and reliance on speculation among retail investors. Although both companies have benefited from growing interest in artificial intelligence, Nvidia's stronger fundamentals and consistent demand for its products make it more likely to achieve its next market milestone before Palantir does.